And please note that this webinar is recorded. So for those of you that can't stay for the entire duration or missed it for whatever reason, it will be uploaded to our channels. So I'm Kay. I'm the Chief Executive Officer of Spectre AI. It is the 9th of February at 6 p.m. GMT. Hello, good morning, good afternoon, good evening, and of course, if you're about to go to bed, good night, wherever you are in the world. We set up this webinar, the crypto market update. It's not something that we're going to be doing going forward, sort of on a periodic basis. We'll do it only if the community demands it. And this time we received a lot of emails and private messages in various avenues, including Telegram, of course, to try and make sense of the markets, to give sort of our technical insight and fundamental insight. We have been participants in the space prior to the ICO, for those of you that have been following us, but also because of our financial backgrounds, we thought we could help in perhaps give you some data points so you could possibly take those away and maybe make maybe better investment decisions or whatever it is. However, I would also like to state at this point that, of course, as stated earlier, this webinar is recorded and will be distributed in social media. It may include forward-looking statements, both about Spectre, but also about cryptocurrency prices in general. But these are strictly for educational purposes only and not to be deemed as investment advice. Spectre AI as a trading platform is strictly closed to US citizens. The ownership of both SXDT and SXUT tokens by US citizens is forbidden and against the terms and conditions of Spectre AI. Financial trading is risky and you may lose all of your funds invested. Only afford to trade with money you can afford to lose. So what just happened, right? I mean, yeah, we've had a bit of a dead cat bounce this week, which is very good to see. One feels naturally better when the markets are green. But towards the start of this week, especially over the weekend, it was an absolute bloodbath, possibly one of the worst quote unquote corrections or pullbacks that we've had in recent history. Of course, we've had worse ones, but people tend to forget about it. But Bitcoin has faced this magnitude of pullbacks before. So we have identified around seven to eight triggers. And what has happened is because they've all happened at roughly the same time, right? The level of stress the cryptocurrency market has undergone has resulted in this 50% on average correction, if you want to call it, right? I mean, some are down worse, some have done better than 50%, but on aggregate, we're looking at 40 to 50%. Okay, and there's systemic stress that's set in from various endpoints. You have China, you have India, you have Western banks, not only the local banks, national banks, but also the central banks have started to weigh in. You have the Securities and Exchange Commission in the US and its rhetoric, which has been ramping up. You have incidents, you have systemically significant incidents like BitConnect. You have controversy surrounding Tether. You have Japan, which is kind of just standing in its own field. It's standing its ground. It has taken a very, very forward-looking approach. And all of these together have created a great deal of uncertainty, and hence you've had this drop. Now I'm going to take the opportunity to analyze these briefly each, and then I will end with discussing the way we see things in the bigger picture, and what this kind of all means longer term for the sector. And after that, we will, of course, have a Q&A. Let's start with China. Okay, so China today is the world's largest economy, by the way, in terms of GDP adjusted for purchasing power, not nominal. China has banned both internal and foreign based cryptocurrency exchanges in operating in their country. So they're using a range of techniques to ban, including VPN bans and all that. And as you know, they're also clamping down on miners. Okay. The thing to note, of course, is that with China, it's a country that's driven by its 5-year economic plans, which they've implemented phenomenally well over the last 30 years. 30 years ago, at the end of the 80s, along with India, both those economies were languishing, but China far surpassed India in GDP growth over those years. And these 5-year plans have been implemented very well. Now, of course, there are issues, there are negative externalities. We won't get into them. The key thing to note is that they have cited financial risks, right? Now, that could mean financial risks for investors like yourselves who are based in China, you know, purchasing cryptocurrencies, making 30% one day but losing 40% the next day. And that's what it could mean. But it could also mean that cryptocurrencies have started to compete with local currency, right? And that's what governments fear, generally speaking. And that's, of course, is the beginning of loss of control over the populace, right? That's where the seams start to tear. So they're going after the entire sector. Having said that, they're also bullish on blockchain in general, right? I mean, obviously, you see Neo thriving there to a certain degree. You see Bitmain, which is a big supplier of cryptocurrency miners and other factories there that are producing a lot of the hardware that is used in the mining value chain around the world. And so there's a bit of mixed signals, but generally speaking, what we're seeing there is a lot of negativity. And this has, of course, resulted in money coming out of the market. Okay, so any and all websites offering cryptocurrency trading services or advertising the digital currency market have been scrubbed from local search engines. Okay, that's an important point. And social media in China, generally speaking, is on a bit to wipe out trade there. ICOs, by the way, were banned. ICO fundraising platforms, I should say, more precisely, were banned September, October of last year. And then, of course, very recently, the exchanges as well. So China has been a big driver of cryptocurrency adoption, right, years ago. And therefore, obviously, if it's been kind of the beacon, it's no longer the place. So money has come out, right? Now, of course, to a certain degree, a lot of the money that had come out because of the ICO bans last September, October, it still continued to trade. It just went abroad, right? Chinese people just started using VPNs and all of that. But now the controls have become much stricter. Now let's talk about India. A lot of policy confusion there, a lot of misinterpreted headlines. And so, in short, India has come out and stated that it does not consider cryptocurrency, specifically Bitcoin, as a legal tender. And they will be actively taking measures to penalize the activity. Now, they haven't gone into specific depth in exactly what that means, but this could mean imposing tariffs on exchanges, asking payment and credit card processors to reclassify altcoin purchases in different categories, such as gambling, for example, resulting in rises in the costs of purchasing cryptocurrencies using your credit card, right? You just get charged more. And regulation on banks, inhibiting the flow of crypto into the economy, right? Having said that, India, like China, is relatively bullish on actual blockchain technology, right? Not on Bitcoin per se, but on blockchain. And it is working on government-backed and private sector-backed blockchain projects, very significant ones. Let's now move to central banks, okay, or Western banks. So last week, I would say maybe 7, 8 days ago, if I remember correctly, Lloyd's, which is Britain's biggest lender, said it would be banning its credit card customers from buying crypto following the lead of the US banks. Okay, JP Morgan Chase and Co. and Citigroup also announced this a few weeks ago. Now, the move is aimed at protecting customers from running up huge debts from buying virtual currency on credit. If their values were to plummet, obviously that really hits homeowners here. It hits the average Joe very bad because not only do you owe the credit card money, the company, the interest on the capital that you took out on the credit card, but you've also suffered a loss on the cryptocurrencies that you bought, and that hurts your viability as a customer to these banks. the high volatility in cryptos allows the creation of such an argument. Although some could argue, if you're your devil's advocate, that this is ultimately a straw man argument, as the real reason why these banks are doing this is because they're actually fearing competition with the underlying fiat currency of the economy. In the UK, that would be the pound. Now, you know, take out of that what you will. I think it's a mix. It's a kind of a mixture of both. But if you really look into it, I would err more on the second argument, that indeed people they've seen what type of a frenzy and flurry this is. Everyone's talking about it, everyone's investing in it, and it does potentially call into question the current fractional reserve banking system, right, to a certain degree. I found it very interesting. For me personally, I thought this was a pretty big announcement. I won't say it went unnoticed, but it certainly didn't get the media attention that I think it deserves. The European Central Bank, as you know, provides a lot of the interbank liquidity in the European market. It saved Europe from total decline 4 or 5 years ago when it started to purchase short-term treasuries for a lot of the banks. It was effectively activating its LOLR rights, which is known as lender as of last resort. It's the equivalent of a Fed. It has a slightly wider mandate than the Fed here in Europe. What is interesting is that Mario Draghi has come out, and I'm assuming that what we're reading in the tabloids if you want to call them that, is not fake news, right? So based on that assumption, multiple sources, some of good repute, have said that Mario Draghi has openly come out and said that the European Central Bank will be actually storing or is thinking to store Bitcoin in their reserves on their balance sheets, right? And that's a huge, huge, huge development. If you tie that in with the creation of the futures market 3, 4 months ago, right? I think it was that 3, 4, maybe 3 months, 4 months. Certainly 2 months ago, it was live and working. The futures market allows large institutions, prop desks, big money, basically, to hedge their positions, right? And that's why the Chicago Board of Options Exchange, CBOE, and even Nasdaq, they're working on stabilizing and growing this futures market for Bitcoin. Then you get the European Central Bank announcing this. If they do start to hold Bitcoin, that's a huge vote of confidence in our books, at least, right? So that's the situation with the banks. And as a corollary, you have the CFTC and the SEC. Now, the American situation, the United States situation, I should say, not the American, is far more complicated, as it is the biggest steward and creator of the largest fiat currency by circulation, which is the US dollar, I think close to 40 trillion in circulation of cash. And it has seen the competitive forces not only Bitcoin creates in that economy, but of equal importance, I would say, is the potential systemic threat to their stock exchange system, right? The NASDAQ, the Dow, New York Stock Exchange, which is still operating on dated principles, one can argue. Not only America, but all over the world, right? The traditional stock market is relatively dated in terms of settlement, in terms of the speed of trading, and so forth. And it's very centralized as well. Okay. It is in their interest, one can argue, to ensure that cryptocurrency growth doesn't outperform that of the traditional investing sector, right? It kind of makes their job much easier when you have incidents like BitConnect, which I'll talk about shortly, happening right in their backyard, right? It makes their job easier because they can pull up that argument, if you want to call it a legitimate argument, that they are putting these regulations to protect the U.S. investors or not. That remains to be seen. We'd like to believe them, of course, but of course makes their job much easier when you have a BitConnect going down, right? Now, very recently, I think it was 48 hours ago, we saw a Senate hearing of the CFTC and the SEC. They certainly took a more favorable approach towards the blockchain in that hearing, with both generally agreeing that the future is one that includes cryptocurrency, but one that is well regulated, right? I mean, they could have easily decided and said, no, this is too dangerous. We're putting an end to this, and that would have been a cataclysm for the market, certainly in the short term. But they took a much more favorable approach, and that's very, very good to see. So let's talk about BitConnect a little bit. Now, building on the point I just made, each time a Confido, a BitConnect, a DAO, an MT Gox, a coin check happens, it gives the regulators more reason to clamp down on the sector. And these clampdowns, they slow down the long-term asset price growth, right? They cause these unnecessary uh, corrections, right? Or at least to a certain degree, the magnitude of these crazy corrections, 50%, it's too much for most people to stomach, right? And these incidents exacerbate that. Was it really that necessary for people to invest in what are obvious scams promising ridiculous returns, right? And what's shocking to see is that known scams, they pivot and they offer a new offering, and people actually flock to that. Less so, but it is this type of activity which actually hurts the sector. So our advice on this front would be very careful of vaporware, as it's called. It is in every sector, and more so in unregulated sectors, which cryptocurrency largely is still. And each time you invest in it, you empower schemes that can hurt this space in the long run, because they will go down, they will go bust, and then the regulators have more ammo. So avoid such schemes and be very careful when investing in anything to do with lending or collective investment schemes, HYIPs, hedge funds that claim to, be able to dominate the market. I'd like to really point out that everything has gone up in the last 3 years. If you've lost money during this period, you're probably just an amateur. It happens. Maybe you got in at the wrong end of the cycle. But generally speaking, last 3 years, it's been very difficult to lose money in cryptocurrencies, right? So a lot of people can come out and say, we want to be fund managers, look at our last 3-year track record. To that, I would say it's it's beta. It's pure market beta, right? The market's gone up, so you've made money. What separates the boys from the men, and of course, this is just a terminology, it's not me being sexist, is uh, the alpha generation, the market excess return up and above the beta, right? Up and above the hurdle rate. And no one has had a chance to prove that yet. Tell me one fund manager that has been able to do that. You can't, because everything goes up. It's a correlated market. During these corrections, and now when we have a futures market and we have the ability for some large exchanges to offer shorting, to give carry, so you can directionally trade both sides, not just long, right? There you will see who are the really good fund managers, who are the really good collective investment schemes, HYIPs. But we're not there yet. There's going to take another 3 to 4 years. So be very careful when you're investing in these types of funds, aggregated or diversified funds. Ultimately, they're all in crypto, right? And the asset class is very correlated. Steve Stronging, he's the head of investment research at Goldman Sachs. And he came out with some scathing comments, which obviously, were ignored. I ignored them as well. He went all pre-dial-up on the sector again. He said, most coins have zero value, intrinsic value. I disagree with that. But he was spot on about one point. He said that there is way too much correlation. And you'll see that. And I've said this before in previous webinars. When the markets are red, everything is red. Even our little cute, adorable tokens, the U token and the D token, we barely have any liquidity. They move with the market, right? Which means that there are funds out there that own almost every coin. And when they dump, it affects every coin. When they buy, it affects every coin. There's a lot of correlation. That means a lot of the money lies in the hands of a few big players, right? And that's a dangerous sign of a market. Again, it's normal to have these aberrations in holding patterns, right? You want to have a more diversified investor base so that you don't get these heavily correlated moves. And that will happen. That will happen over time, right? The key is, of course, to be patient. So let's move on from BitConnect and talk a little bit about Tether. I think we're making good time here. Now, for those of you that don't know, Tether is a popular financial mechanism that allows traders to park capital in a pegged virtual dollar when they don't want to be, if you don't want to be long cryptos at an exchange, right? So when you don't want to have exposure to cryptos, you can park funds in Tether. Each time Tether is purchased, the Tether Foundation is effectively ensuring that for each Tether out there, an equivalent dollar is held on the book, on their book. Roughly speaking, that's how it works, okay, without getting too deep into the mechanics. Now, recently, according to media, Tether parted ways with its auditors. That isn't fake news. They confirmed that as well. These days, we need to uh, disclaimer everything. What could be fake news, what couldn't be fake news. So it's not fake news. And they said that there was a disagreement over the balance sheet, especially owing to the latter, or the regulators going through excruciating amounts of due diligence. And I think there was a time issue there. So they just said, okay, let's part ways. Now, there are two camps here. It could simply be a procedural issue. It happens. But of course, there are the fudders, if you want to call it, or those who genuinely have merit in claiming that, look, Tether could be vaporware. That's not what we're saying, but that's what the sort of the bears are saying. And the bottom line is that the systemic contagion, and this is something I would like to state, is rather limited. Okay, that's something to note. This isn't a mortgage-backed security repackaged and sold to European countries, and somehow it's found its way into your bank, and your cash deposits are at risk or anything. Yes, there are some exchanges that will be affected if Tether, turn out to be vaporware. We don't know. However, the sharp drop in coin prices that you've seen, the 40-50%, I would say a big portion of that is relatively factored in, right? I'm not saying it's 100% factored in. Of course, there'll be weakness. Tether, in my personal opinion, is not going to be the thing to bring the market down if there is negative news there. If, of course, nothing is wrong, all is fine, it's hunky-dory. So let's talk about Japan. Takashi Shiono, an economist at Credit Suisse in Tokyo, said that there are estimates that tax revenues from cryptocurrency businesses, including capital gains taxes from individual investors and from corporations that are trading in the currency, could amount to 1 trillion yen. That's around $10 billion, okay, $9 to $10 billion. Now that, by the way, is almost, I think, something like 20% of Japan's forecasted GDP growth next year, roughly speaking. Now, bear in mind that figure could be off by a bit. Don't quote me on that, but roughly speaking, and also bear in mind that Japan isn't a quickly growing economy. But it's still significant to see that that's what they potentially project. Now, this is despite Coincheck's, the Japanese exchange, $400 million hack. The country wants to become the cryptocurrency capital of the world. What I've personally found very interesting is similar to the European Central Bank news that they may consider holding Bitcoin. The Japanese airline called Peach Aviation has confirmed that it will be accepting Bitcoin, so people can actually pay in Bitcoin to travel around Japan. So this is an important point because food, transport, housing, education, and healthcare are the most vital sectors to the functioning of an economy. It is a massive step forward that the transport sector is starting to accept Bitcoin payments, albeit in only one region, okay, Japan. But Japan is normally a trailblazer in terms of technology and not a laggard, right? That's important to note. So it's a low-cost carrier, by the way, Peach Aviation, but it's so important that if you can travel using Bitcoin, right? People were always wondering, okay, what can you actually buy with Bitcoin? Now it's actually a transfer of value and it gives you transportation services, right? Then if you start to get local food marts accepting Bitcoin, then you can actually pay for food. And then you're at the situation where, okay, if this spreads around the world, you have a new currency. You have, of course, you have fiat. I think there will always be a place for fiat. I'm not one of these people who believes fiat is going to be dead in 10 years because I'm not a crypto anarchist. But there should be a room for cryptocurrencies. And this whole urge to how quickly can I convert my Bitcoin to dollars, or how quickly can I convert my gains on these tokens to dollars, that will subside to a certain degree, right? The answer then will be, okay, how quickly can I convert my gains on these tokens to Ethereum or Bitcoin? And hey, can I use Ethereum to book uh, a small getaway with my wife and kids? Or can I buy my groceries with this? And if the answers to that start to become more of a yes, um, that's where I personally feel you're going to get huge global adoption, right? Now, notice in this webinar, I haven't done too much technical analysis, right? Um, I'm happy to kind of discuss that as well in terms of the TA behind the Bitcoin charts and all that. I think we'll leave that more towards the Q&A if you have any questions on that. The thing I wanted to end on is the bigger picture. Okay, everything I've said so far is fine. It's a data bits here and there. Hopefully, it helps you in some way. A lot of you probably already knew all of this. I think there are two slides that I want to show you before we end, and it's one which encapsulates the human psyche, the investor's psyche, and this is applicable to every type of investment, right? There is a 14-stage emotional cycle. You can Google it. I stole this off of Google, by the way. And you will normally see that it starts with optimism and excitement and thrill. Okay. And you have felt this as an investor. If you've been in Bitcoin in the last 2 years, you have felt the optimism, excitement, and thrill, and even the euphoria. Do you remember December, November? You were euphoric looking at your portfolio, some of you looking at millions in uncrystallized gains. And then the crap starts to set in, right? Then these 7 factors that I detailed in this webinar today, they start to cascade upon each other. They start to come one by one, and then the system, the points of failure, they started to give, and that's when the asset prices started to decline, and you had anxiety set in, right? And anxiety, sometimes people listen to their inner voices and they convert, right? They convert a lot of their gains to fiat, and they lock it in, which is good. But some don't. Some believe that there's more to go, and unfortunately, the masses in the market actually hold on to their gains. And so anxiety turns to denial. It turns to fear when you actually see asset prices wiping out the last three months, which is exactly what happened in Bitcoin, right? Bitcoin prices are now where they were in October or September of last year. And then if asset prices fall further, and that was potentially the case at the start of this week, had we not had some good news from the SEC, then you basically move from fear to desperation and panic, and that's what precipitates the decline, right? In every drop in the market, there is a real fundamental value drop. For example, in this case, out of all the news items that I've gone through now, money coming out of the market driven by actual threats, right? Driven by actual countries saying we're going to do this, is actually Indian and Chinese money coming out, right? Because there the governments have actually said we're banning this and that to a certain degree. China more than India, but you get my point. The rest of the stuff is just speculative. It's FUD and all of that, right? Generally speaking, but the market hasn't fallen by 20%. The market has fallen by 50%, right? And that additional beta, if you want to call it, that's what you call the excess. That's fear, right? Uncertainty and doubt. And so you had this also in the dot-com bubble, right? Fear, desperation, panic. You had crazy IPOs back then. The value of the dot-com bubble, by the way, was $4 to $5 trillion. Peak. Trough, I think it was, a few hundred million market cap. It had completely collapsed, all the companies. The peak market capitalization of cryptocurrencies barely touched $1 trillion in December, right? Roughly. Don't quote me on that. I think it was 800 billion or 900 billion. And now we're back at 300 billion or whatever, 400 billion. But the point is that we've been here before. And similar to the dot-com bubble, You had a phase of desperation, panic, capitulation, despondency. This lasted many years in the tech sector. But then you had Facebook. Then you had Google. You had Twitter in '07, '08. You had these amazing companies that came out. And by the way, there's so many more that I haven't mentioned, right? And they actually proved that Web 2.0 exists, that these servers can build hugely scalable businesses, billion-dollar unicorns, and the rest is history, right? The key thing to note is that when everybody's panicking and is in the mode of and is capitulating and is despondent, and some are near depression. I famously quote the chicken nugget incident for the uh, poor guy who lost his money in BitConnect, and his mom brought him some chicken nuggets apparently, and he threw the plate at her, or he ate the nuggets and he threw the plate at her, or he threw the nuggets at her and ate the plate. He was so angry at BitConnect, and this kind of was all over Reddit. I can't quite remember. It's something like that. This is the point of maximum financial opportunity if you take a long-term view, right? And this cycle repeats itself. And you know what's really interesting is, look, it starts with optimism and it ends with optimism. Okay? So that's one thing to take into account. Now, of course, a lot of this is wishy-washy. You're probably saying, yeah, but okay, have we been here before? So I'd like to show you something interesting. This is from 1871, when the S&P began, quote unquote. And these are inflation-adjusted secular highs, okay, for the S&P companies, the S&P index. And this data is from 1870 until January 2018, so it's very recent. And you can see here the First World War, the Second World War, the 1929 crash, the hyperinflation. You can see here the three recessions of the 80s. You can see the 1970s energy crisis. I haven't superimposed that, but I'm just letting you know. You can see here the Asian financial crisis. You can see the dot-com bubble. You can see Lehman Brothers. You can see the mortgage crisis as well. Now, what is interesting is how many times have the markets, traditional markets, with much more money in them, fallen by 50% or more? Many times, right? You can see it March 2009, 1982, 1950, 1930. Now, here's the interesting thing. Each time they've fallen by that much, they have recovered by hundreds of percent, 100%, 2, 3, 400%. You can see it here, right? Even the very heavy crisis of 2008, 2009, they hit new normals. They establish all-time highs. It took a few years because those markets move slower. Now, if you still believe in the underlying fundamentals of cryptocurrency, then the outlook is potentially positive. Okay, so people always say that the biggest deniers are the ones that say it's different this time, right? Because it's denial, and denial is one of the points on the 14-stage emotional cycle I showed you. But I'd like to actually say it is different this time. Not that asset prices won't fall. They did. They fell hard. The driver of the drop, however, has nothing to do with the underlying demand for cryptocurrencies, right? Either as speculative investments or actual stores of value such as Bitcoin and Ethereum. Okay, I want to stress that statement. Unlike mortgage-backed securities, which was the biggest asset price bubble in human history, one of the biggest, if not the biggest, where the underlying ability of the US homeowner to actually repay their mortgages was poor, but the ratings agencies, as it was later found out, lied about the creditworthiness of homeowners, and this allowed banks in turn to actually sell toxic debt, investment banks, toxic debt worldwide through repackaging of derivatives. Or the fact that tulips actually didn't have any scarcity value, right? Humans didn't understand it back then. They were arguably much dumber than we are now. But it's not the same this time because the asset in question has a capped supply, right? Bitcoin is a capped supply, and it's increasingly being used in the world as a substitute for fiat. Okay. So if you think about it, it's not like demand has dried up. Everything was going great, right? People were subscribing to token sales, and yeah, there was a lot of scam, and that needs to be regulated, but demand was increasing. The mass scale pace of adoption is what worries the powers that be. It's exactly this that worried them. And this is why you see a concerted effort by leaders across the world to denounce Bitcoin. Did they do the same? Did you see that guy from the Bank of International Settlements last week? Did you see him coming out and attacking Bitcoin? Did they do the same for toxic debt in 2008? The dot-com bubble or anything else? Do you remember these guys' coordinated efforts by central banks, by SEC, by all these agencies? So if you step back and you look at this, you say, okay, there's actually a lot of demand for this, but it's competing with demand for the very lifeblood that has built all the GDP and economies over the year, the fiat fractional reserve banking system. And that's what's actually driven the crash, right? So my parting remarks, is the space flooded with shitcoins? Yes. Cryptocurrency right now is flooded with shitcoins. Okay. Are there unicorns hidden in this mess? Statistically, yes. Statistically. We already see signs of genius with some very well-run blockchain companies that are sticking to their delivery schedule and delivering great products. Steam is an example. I had an interview with one of their business developers. Ethereum is another example. What a fantastic project. Of course, it has its drawbacks and it will have its challenges in scalability, etc. But so far, kudos to them, right? Bitcoin is already a globally used and widely accepted currency. It's a successful project. There are a range of blockchains with millions of users who actively participate in using their tokens to transfer value or participate in helping solve transactions by investing and earning a return on mining equipment, right? There are various layers of this industry already in place with proper tech behind it. Can the tech improve? Yes. Is it inefficient? Probably. But human ingenuity has overcome much more difficult challenges, right? I mean, we've put people on the moon. I'm assuming you don't consider that fake news. So to call it a scam, which is really interesting when I see guys like Nouriel Roubini come out, very, very educated, very smart people, and to call it a scam, or Jamie Dimon came out and called it a scam, he later apologized, which was good of him. That's what makes me smile because I'm like, okay, you can attack it for its scalability, you can attack it for its certain use case, you can attack it for the level of scam, for the level of potential, collective HYIP, collective investment schemes that you can raise. You can raise a lot of money. You can attack it for that, but you can't call it a scam because the demand for it and the fact that it's actually being used as a store and a transfer of value shows that it's not a scam, right? So that's what makes me smile. I get very excited when I see that because that's the only vector of attack that they're using, right? Because they're smart. They've analyzed it. Cliff High went through the code of Bitcoin, and I think he gave his approval for it years ago, right? I'm not sure. I think it was 2010 or 11. I can't remember when exactly, but and so this is what gives me comfort that it's not like they've found some sort of massive systemic structural problem. Okay. So on that note, I think I have spoken enough. Let's open up this to Q&A. Okay. You can ask your questions, just type them out and I'll read them out. You. Okay, a lot of questions coming in. When Bittrex, when decent exchange, how dare you? Some good questions, keep them coming. Okay, so I see a question here. That's okay, Thomas. I think you got it now. You're typing in the right place. Okay. David Butler asked a great question. He's referring to the 14-stage emotional cycle. He is saying, um, where are we in this cycle? So, David, this is a great question. If you look at the sharp drop, it's almost 50, 60% in that range. If you listen to the chatter, the feedback in the rooms, Reddit, Bitcoin Talk, Telegram channels, the level of FUD that's gone into it, the amount of incidents, right? Like MTGOX, the DAO incident, CoinCheck, the various hacks, all of that. The sector's taken quite a bit of a beating, but despite that, because of adoption, it's increased. I would say we are currently towards the end of that cycle. Certainly in this wave, right? The market moves in macro waves. If you study Elliott wave theory, whether you believe in it or not, generally speaking, the market moves in upward waves. Now, this temporary setback, I would say, has created an environment of fear, despondency, even to a certain degree, depression, if you want to call it that. So I think that's where we are. We're certainly towards that period. Okay. Les Adams is asking, just how do small investors buy crypto when their credit cards are blocked by banks, etc.? Do you think banks might change their policy towards cryptos? Yes. So this is my personal opinion. Okay, it doesn't reflect Spectre's or anything. If the bank of banks, like the European Central Bank, it's a lender of last resort. It creates interbank liquidity as well to a certain degree. If they are considering holding coins on their balance sheet, then by definition, the interbank market would also be potentially holding coins in their balance sheet. So if they do that, they have to change their policy towards consumers being able to purchase Bitcoins as well, right? Or whatever currency, whatever cryptocurrency it is. So I believe the banks will take a favorable view towards cryptocurrencies, but it will take time. That's an answer to the second part of your question. In terms of how do small investors buy crypto with their credit cards, so I'm a very risk averse person. I personally think taking out debt or buying cryptocurrency using a credit card is a very, very, very uh, dangerous thing to do. You should not be. I mean, again, it's not my place to say this, but since you've asked the question, um, if you need to access your credit card and you don't have just cash lying on your balance sheet on your private account, you need to actually go into debt to purchase. That's known as a leveraged purchase. You're leveraging your investment, and that can hurt you if you buy at the wrong time of the cycle. So yeah, if you did it now, since 50, 60% of everything is down, or you wait a bit, it falls a bit more further, it makes more sense. But generally speaking, uh, I personally think that if one is going to be purchasing, getting into these high risk assets, and right now they are speculative, they are highly volatile. You don't do it with your debt. You don't do it with credit card debt. So use cash. In terms of how else do investors do that? Well, you save up and you have a small amount, whatever it is, £100, £50, $50, $100, $200, $300, but you don't do it with credit cards. Now, the banks are using this excuse saying, oh, we don't want our customers to get hurt. Partially, there's truth in that, right? Because what if they've seen what Bitcoin did? Let's say there were 1,000 customers at Lloyd's who had $2,000 checking accounts. Both were in minus. They had a $5,000 withdrawal limit on their credit card. They maxed it out. They bought Bitcoin at 17,000, and Bitcoin halved. So what happens now? They're sitting on this huge debt, and they've made a capital loss. Now, what happens is those guys may just forfeit their accounts, just walk away, right? And say we can't pay it or whatever, and then they get chased by the county court, CCJs, etc., and that becomes a hassle for the bank. The bank has suddenly lost clients that were paying them for years to this crypto thing, right? So I think there's some truth in there, Les. See a question from Paul Thompson. Paul Thompson is asking, please comment on Ripple. Okay, so Ripple is obviously, the one that's known as the bank's cryptocurrency, solving financial transactions very quickly. We're not investors in Ripple. However, if you look at the By the way, one thing I would like to state is we keep an eye on fundamentals, as you can see here. We're not those technical anarchists, technical analysis anarchists, but we have a very deep background in technical analysis as well. For those of you that have been following me for years, I've done a lot of webinars for foreign exchange brokers, so we know our TA very well. A lot of the investments that we make are also TA based. Now, Ripple has been absolutely hammered to pieces. Like it has been crushed. It went to 3.2. The 50% Fibonacci would have been 1.6, roughly 1.5. So, the average TA investor started topping up there, but no, it took even a bigger beating. It went past the 62% fib level. I think even at some point it had fallen 70%, 80%, right? So I think it's dropped very hard. I personally believe there will be a dead cat bounce that will see Ripple higher. This is not investment advice, okay, for the regulators on this call. I, you know, that's just my personal advice. I think it's been hit very, very hard, over proportionally hard. So you could see that cat bounce. Now, of course, you need to keep yourself on top of the news flow. A dead cat bounce, by the way, is a term from the financial markets. It's not like I'm anti-animals or I'm a psychopath. It comes from the saying that if you throw a dead cat hard enough against the ground, it will bounce with a certain velocity. I don't know how that actually came around, but it refers to markets that correct too fast, too quickly. And by a very high magnitude, they tend to bounce quite sharply. Now, that bounce is maybe 10, 15, 20% of the way down, sometimes a bit higher. And so I would say with Ripple, we're there. Long term, I have no view on Ripple. Okay, I see a question from Sergi Tabun. Why so few projects that are already working since 2008? Just projects. Can you clarify that question? I guess what you're saying is why are there projects still projects since 2008? Is that what you mean? You're saying why hasn't there been actual substantial progress? Just clarify that for me. Thanks, Christy, for your feedback. Thomas Gleason is, firstly, he's saying you. Yes, I agree, you. Second, he's asking, since the project is not necessarily decentralized, like Ripple, for example, are there any risks that Spectre company can shut down their systems and leave if the project is not profitable? The funds that we've raised are in a smart contract, as you know. Once they go into the DALP, we don't have access to them. So the bit that we commit to the DALP is literally locked by a smart contract. That code is open and audited. You can see the only way we would get paid is if traders trade or the dApps that are connected to the DALP generate volumes. Again, this isn't a DAO ICO, so it's not like the funds are held by you guys, and if we meet milestones, we release them. So in a theoretical concept, any ICO team can run away with the money. However, I think if you've been with us, we're the type of team that will literally sink with the Titanic. This is our ship, this is our Titanic. If it comes to that, we would never consider even doing that, right? Not even close. Spectre is semi-centralized. Of course it is. If you look at our web app, that's where the trades are initiated. We have, of course, explored prior to the ICO last year itself a fully decentralized version of Spectre. The Ethereum blockchain is no way near scalable. Neither is EOS. It just wouldn't work. Spectre is high frequency. I can do, I think, close to 100 to 200 trade transactions per second. That will increase over time. It's hugely scalable, and you only get that with a semi-centralized structure. The most important thing is, here's the most important thing, client funds are on the decentralized part of the blockchain. The actual trade transactions being checked, oracleized, etc., that's happening on the decentralized bit. The actual gateway to the entry of the trades, because these are smart options, right? Smart CFDs, they're synthetics. You don't actually own the underlying asset. It doesn't need to be decentralized. So it's a good question you asked, but yeah, no, we're not running away with the money. That's not our mandate. Vitalik Buterin himself said, I think two webinars ago, I don't know where he was, but he was doing a roadshow for Ethereum in December. And he said the answer is not full decentralization. And I agree with that, right? Because you sacrifice a lot of the commerciality of the solutions that you're creating to disrupt the problems that are created in the centralized world. If you fully decentralize, there is a medium ground, right? And you will see that with Spectre. You'll see exactly how that plays out. So a question from Thomas Couturier. What exchanges you foresee as the first exchange to hold SXDT? And what are your expected timelines? Sure. Thank you first for the feedback, Thomas. Okay. So on exchanges, here's the thing. We would like to list SXDT on every single exchange, right? But here's the reality. You saw what happened to Binance last night. You saw that. It was a huge scare in the markets. Luckily, they came out professionally and said there was no issue. And we're going to hold that as valid, right? We'll assume that that's the case, so that's good. We are doing heavy due diligence on every exchange because it is not as simple as just us putting the tokens on the exchange. Because what if that exchange becomes the next CoinCheck or the next MTGOX? You will come out our throats. You'll say, how dare you do that? I lost all these coins, right? So because this sector is so deeply unprofessional, and I will say this, it's deeply unprofessional. The onus on us is not only to ICO and to deliver our roadmap, but we also have to run due diligence on those exchanges because they have no clue what the hell is happening in the regulatory landscape. They have no clue about security. Some do. Some are really well-run exchanges, but it's few and far between. Okay? And then you have the arrogance as well. The arrogance of some of these exchanges to charge $500,000 to $1 million. Let me tell you this. You give me $1 million, I can get 5 million users on the platform, right? Over time, roughly speaking. I mean, that's over time, right? When the cost of acquisition goes down. I'd rather spend on that and deliver dividends and growth of tokens than pay some arrogant exchange 500,000 to $1 million. Now, I'm not calling any exchanges arrogant by name, but these exchanges have to get their act together before we can safely put our tokens there, right? That's the first thing. The second thing is KYC. After BitConnect, the SEC and the Americans have taken things to the next level, rightfully so, because if tokens are that dangerous, then they need to, as Reggie Middleton rightly said on his last webinar, they're seeing everything. The hammer sees everything as a nail, and the SEC is going to be classifying everything as securities. Now, potentially, the SXDT is a token that we can't police if it's held by US citizens if they procure it outside of our token sale, right? We have IP checks, we have VPN checks, we have a range of tick boxes, terms and conditions. But if they perjure themselves, if they break our terms and conditions, they can hold the SXDT. There's nothing we can do about it. It's on an exchange. And if it goes up because we're paying dividends and they can sell it for gain, there's nothing we can do about that, right? However, if they come to us and they want to reap dividends, if we do KYC, and we have to do KYC for dividends in order to comply with our regulatory license, which we are shortly going to be getting, to ensure that we're not financing terrorism, believe it or not, that's a huge, huge clause in getting a regulatory license, whichever regulation it is. We have to run KYC above a certain threshold. Now, if we find out there is a SXDT holder that has acquired our SXDT token on an exchange that we listed it, then we have two options. We can pay them the dividend, risk the project, risk the SEC calling us up and saying, oh, you're marketing your tokens to the Americans, although we're not. That's how it will be framed, right? Or we can salvage the project, not put it at risk, and we can say, well, sorry, it's against our terms and conditions. You're not supposed to be holding the SXDT, and you're going to be denied dividends, right? You know which one we have to comply with for the sake of the project. This is the regulatory landscape we live in. It's become tighter since the ICO. It's not loosened. It's become tighter, so we need to adapt. So in answer to your question, we have to look at the exchange and we have to see, A, is it secure? Is it run by a professional management team? Do they have a good balance sheet, right? Do they take on book risk? What is their VAR, value at risk? Do they offer carry? Do they offer margin trading? These are all negatives for us. We need to make sure the exchange is vanilla, okay? Once it's gone through this due diligence, we need to look at their KYC. What KYC are they running on their traders? If they are taking Americans, not a problem, but then they have to build in an IP check for us such that those Americans don't see the SXDT token on that exchange. If we don't do that, you're going to get a million Americans owning the SXDT coming to us for dividends, right? We either pay them the dividends or we perjure ourselves with the SEC. This is a game of chess, okay? And we are fighting 100 variables every single day. And we have to navigate through this minefield until the sector finally clears up and allows legitimate companies like ours to deliver our roadmap. And in our case, our vision, which is to make trading fraud free, right? So a long-winded answer, but this is the complexities. Now, regarding the SXUT, the token famously known as U, right? U will be listed everywhere. We're okay with that, right? Because it's a benign utility. Okay, I see a question from Robert McLeod. Can you touch on the new improved version of the spreadsheet in your forecast document? Those numbers seem really bullish, and I don't quite get them. I agree. Robert, what's happening in that document is a lot of people are playing around. Today I went in, someone put in 5 million traders. I got a heart attack because we're expecting 3,000. So you got to be careful which spreadsheet you're on. Don't go to the sandbox. The sandbox is total garbage. It's just noise. People are playing around with numbers. Zero resets it every once in a while. Go to the balance case. Those are the real numbers. That's the figure that we're hoping to beat, to achieve, or to beat. And that's what I would stick to. I hope that makes a bit of sense. Good question from this question was from Hugo Nuenz Romante. Sorry, Robert McLeod's question is, how exposed are we to discrete high-impact events, i.e. U.S. Department of Justice against Bittrex or some other clampdown? The SXDT, SXUT token, because of the strategy I just told you, our exchange strategy is different. We're a bit more thoughtful in terms of where we're listing the tokens. We would be less affected. Okay, I think if you're referring to the SXDT, SXUT would be less affected, right? Because we're not going to be putting our tokens just everywhere. If you mean how exposed are we as investors, cryptocurrency investors in general, to U.S. Department of Justice actions against Bittrex, well, how much money do you have in Bittrex? That's the question, right? And then you multiply by the number of users, and that's the exposure, so to put it. See a question from Kevan Devani. When will pension funds controlling at least 6 trillion and other institutional money start pouring into the crypto market? Under what conditions and environmental criteria? Okay. Firstly, a futures market, a forward and swaps market, which will hopefully evolve. We have the futures market already for Bitcoin. It's developing, which is good. Let's hope that becomes stronger. And of course, regulation. The SEC can't be giving hearing testimonies at the Senate while teachers' pension fund is pouring into Bitcoin, right? These hedge funds are these institutional money managers, where it's insurance funds or pension funds or hedge funds. They're very risk averse. They have ironclad mandates. Otherwise, they will have huge redemptions, and so they move slow. So regulation is important. Once we get that, and look, there are signs, right? There are signs. The signs are positive. They're not negative. Then you can get big money moving into the sector. We're not there yet, however. Okay, I see a question from Gerald. About 480 million K came into the market around Christmas and Jan, and in Feb it all left. Could the financial industry have been coming in December and January only to dump on the market to get cheap tokens when they come in, or could they have done that in conjunction with the stock market correction? Gold and silver were both smashed down prior to the stock market drop. I think it's the latter. It's just speculation, Gerald, on my side. I could be wrong, but I found it really interesting that we had a drop in the Dow Jones, the S&P the other day, and it coincided with the drop in cryptos, right? And immediately the next day you had a significant rise, which has continued a bit today. So you had all these weak hands that were shaken out, market down 30, 40% January, Feb. And suddenly you get this 20, 30% rise. Would it be the same people that are currently in the 14-stage emotion cycle? They're despondent, they're depressed. Would it be that those people coming back in, or is it more likely new money? And is that new money come as a result of sector rotation, coming out of the traditional stock markets going into here? I don't know. I don't have the data to answer that. One can only speculate. Okay, D. McRoy is saying, I think credit cards are more used as a mean to enter the market opposing to wire transfer. Yeah, that's a fair point. I agree to that. Mike O'Donnell, bankers will be giving loans to themselves and buying Bitcoin now. Yeah, possible. Gerald is topping up his point, saying if you look at the market, there's a huge rise in vol. Yes. By vol, you mean volumes or implied volatility? Stefan Peters, are the banks developing their own cryptocurrency? If yes, why would they? This is a very, very interesting question. So, would you consider Ripple, which is to a certain degree has the blessing of the Australian, the Reserve Bank, the Australian Central Bank, um, the RBA, or the fact that it has made inroads with the Japanese, the BOJ as well. Would you consider that possibly as them developing their own cryptocurrency? Or is your definition in your question more, are they actually going to be creating a crypto version of the pound, right? Which I think was in the news with the Bank of England just 2 weeks ago, 3 weeks ago. The answer is I don't know if they are. I do know from data points that I've received with, from some friends that work in the financial sector, that there are plans for that. In terms of why would they? Look, as much as these bankers call it a scam, we all know it's not a scam, right? We've all used it. We've seen how powerful it can be. So they've probably seen the use case of the blockchain, right? And transferring money using the blockchain, if we can work around silly gas costs, which we saw in December and Jan, which were just disappointing, which are rude, to be quite frank. And there is a way around that, right? There's many ways to improve blockchain verification, transaction verification mechanisms, such that miners remain incentivized enough, but you're not kind of competing with freaking PayPal all of a sudden, right? Your costs need to be low if you're using the blockchain. So I think they will create that, and I think they will effectively, over time, what we know as fiat will start to be processed on a bank version of blockchains. So in answer to your question, that's why they would. Now, I don't know how it would work with the phase out, if there would be a phase out of traditional fiat. I don't have the data to comment on that. Okay, question from David Butler. What other countries around the world are following Japan's lead with regards to accepting Bitcoin and other cryptos for transportation? If your question is transportation specific, my honest answer is I haven't done enough research. I should probably get an analyst on that, because I'm actually very excited by that news. We'll get back to you. That's all I can say. Lars Larson, will it be possible to have a living in a third world country for one ETH investment and SXDT in the future? Lars, I wouldn't be able to answer that. It's a speculative response I would give, but thanks for the question. So question from Sebastio. Do you believe that centralized cryptocurrencies will take the lead concerning adoption by banks and states? If so, what will happen to decentralized currencies meanwhile, and how will this invert later? Can you explain what you mean by a centralized cryptocurrency? Do you mean one that's developed by the bank or the state, versus decentralized? Obviously, you're referring to the current coins, right? Can you just clarify that before I answer? Dario's asking, can you name some of Spectre's investments? No, Dario, not over a webinar. Sorry, as that could be potentially construed as investment advice. Gerald would like to state that I suspect this next wave will be one of the biggest we have seen in the institution, and then the flight to safety. I want to go big in the market, and this, in fact, is the monster wave that will kick off the crypto world. So I think Gerald is referring to a third wave, if I've got my waves right, the wave count right. That's very interesting to know, and thanks for sharing that, Gerald. David Winter. David Winter's asking regarding Spectre, where do we stand regarding securities if we aren't deemed to be an approved investor? And also, won't securities be removed from exchanges if it deemed to be a security? This is an interesting point, David. So currently, exchanges are, of course, by the way, there are some exchanges that are accepting securities and Americans. In our opinion, those exchanges are at significant risk, and that's not where we would like to be listing our SXDT token. However, longer term, we actually believe there's going to be a turnaround by regulators. I've been saying this for half a year now. This could happen next year, maybe not quite this year, where we believe the regulation will develop in such a way that securities will be listed on exchanges, and exchanges won't be looking to remove them. I mean, obviously, last year there was a bit of a diaspora, right? All exchanges were just shedding all security tokens with the hope of not being sued or come under regulatory scrutiny. In answer to your question, where do we stand regarding securities if we aren't deemed to be approved investor? As I said, with the SXDT, the worst case scenario is that it remains on DEXs, these decentralized exchanges, which are just not centralized, so it's peer-to-peer. And once the regulatory environment improves, then of course we would be looking to add it on the larger ones. Mike O'Donnell is asking, is there a way you can encourage, I guess, your investors to hold on to Spectre tokens? And will this make the price more stable? So here's the thing. The SXDT is a dividend-bearing token, obviously dividends for non-restricted regions. And it's a direct play on volumes, not only on Spectre, but on the entire DApp network. The DApp hub will be built out considerably over the three years, such that longer term Spectre is maybe only 20% of total revenues, right? At first, it will be Spectre that will be powering the divs and, of course, some of the DALP's passive and active investments. Now, what we've seen in the last month is indiscriminate selling, the panic sell, right? So people were selling every token. They're like, okay, I have money here, I'm going to sell it. I've received a bunch of tokens for a bounty I did, I'm going to sell this as well. So we had the bounty dump as well. I'd like to remind that fortunately, unlike many ICOs that completed their ICO in December, ours are still above ICO price, even adjusted for ETH rise, right? There are some competitors which will remain nameless that are down 50%, 30, 50%. I would never encourage investors here to, hold on, please don't sell our tokens, etc. Our role as a management team is to deliver numbers, revenue, gross profit, earnings before interest tax, net income, and tokenized dividends where applicable. If you look at how the stock market functions for over 100 years, companies that do that are rewarded in higher share prices, right? So that's all we're going to do. That's what we've promised, and that's our mandate. Whether investors want to sell, they want to hold our tokens, this is totally up to them. Thank you, Thomas. That's very kind. Thomas is saying, I'll die with you too. Thomas Gleason. Sorry, that was Thomas Couturier. This is Thomas Gleason. Also, can you please elaborate on what the M token was proposed to do? This is a very good question. As in what the DALP itself will be invested to and the possible risk and returns of that. Very, very good question. Okay, these are two questions. So the M token was an idea we were thinking about in December of last year, because we believe in mining long term, low risk, diversified alt mining, not focused on one algorithm for one specific coin, but diversified. And as you know, the DALP will have around, we'll give more color on this around March or April, but the DALP will have somewhere between 3.5 to 5 million aggregate liquidity. Now, this breaks down in various tranches. There's immediate liquidity, which is 1.5 million in ETH, and then you have various layers of liquidity, which are subordinated. So you have different tranches. For example, you will have primary liquidity, tertiary liquidity, reserve, and emergency liquidity. Now, reserve liquidity, we can leave it in ETH, like jackasses. ETH doesn't yield, so it's just sitting there fluctuating. Or we can convert to haven assets like gold, quote unquote silver, if you want to call that a haven asset, um, metals in general, or we can put it into bonds, equities, and all that, which is not a bad option, by the way, right? Longer term. So we're doing some of that. As long as it yields, that's the most important thing. It needs to yield, right? Because that yield we can tokenize and pay out to SXDT holders. So the DALP investment mandate splits out as 15% in passive participation opportunities. By the way, this is all on the website. And 85% in active participation, where the DALP will actually participate in transactions. So like, for example, that e-commerce platform, right? In theory, the DALP, if we go down that route, would participate in each transaction. Or the DALP would provide liquidity to a betting app, right? Facilitating bets amongst peer-to-peer. That's an active participation role. Passive participation role is like the DALP, for example, investing in a dividend yielding fund, for example, a low risk fund. Okay. So the M token was specifically focused on mining, right? Because the way we saw it is that, okay, we have, let's say 100 investors, just a sample set, right? And out of those, maybe 30 already have enough exposure to mining. So we would do a vote and we would ask the ones that want exposure to mining, we would issue an M token, airdrop it to them. The M token wasn't supposed to be issued for us to raise money, right? That's no way. It was basically an airdrop. It would be just a gift. And then the M token would be like SXDT2, where it would just be receiving steady streams of our mining operations, which are tiny, by the way. It's when we did the conversion exercise and we saw the gas costs and we saw the general complexities, we had certain users coming to us and saying, what's going on? What's SXDT? What's SXUT? What's SXS2? There was so much confusion. We said, my God, issuing an M token would just complicate things. So instead, what we've done is, when the mining thing kind of ramps up, we are going to be paying out the part of the profits to the DALP and then part of the profits to SXDT holders. So no M token. Okay. In terms of the risk reward, to give you some figures, it's tiny. So the investment in mining is maybe 100, 150K. Okay, and you know the level that the firm was capitalized with in December, so it's a fractional amount. And I'd like to remind again, we are ultra risk averse individuals. So you'll be receiving no hype from us, and any project that we do vet will be very carefully vetted. Okay, I see a question from Billion. What's the next big step for Spectre? The next big step is the bounty with HackerOne. We're going to be announcing that shortly. Safety is the most important step. No one seems to really care about it too much when things are going great, but then shit happens and then everyone's like, you aren't secure. You didn't do this, you didn't do that. So we don't want to be in that situation ever. So we're doing a very rigorous security bounty on our platform and on our website. Mike is coordinating, Mike Bootwell. He's a friend of the firm, an advisor, and he is doing a really good job so far with it. And that really ramps up next month. That's a big one. Then the platform goes live March 31st. And already March 10th or so, we're starting the heavy marketing, building our B2B, B2C channels, both on the white labels, both on the introducing brokers, the affiliates. We expect the regulatory license grant towards the end of March, to the beginning of March, possibly until the 15th or 20th. Of course, we'll be announcing this as it goes. So that's the big next big step, if you want to call it, would be the launch of the live trading platform. Remember, we are already past our alpha. We're already past our beta as well. So we're kind of done with that. Now it's time to go live, and it's time to actually deliver everything. In terms of what we can expect in 2018, this is Billion's second question. So what we can expect in 2018, we're going to actually be putting this on our roadmap. What am I saying? on our website. Our new website is going live. The ICO website is going to be deprecated, and our new actual brokerage website is going to go live. And there you will be having official guidance, right, with all the legal T's and C's and everything. And there you'll also see our quarterly growth projections. So we break that down by quarter for the first time in terms of users and all that. I'm also very excited to say that we've made good progress on the DApp Hub side. DappHub.net is a separate website that is being developed. It will have its own team. I'll be an advisor there as well, and we're really going to be ramping that out in a big way in the next 3 years, right? So talking to a lot of strategic partners, game development houses, all of that. It's a separate kind of team that's working on that. But that's a big part of the story as well. So you'll probably hear more news flow on that over 2018. Yeah, good. Good question, Thomas. Gleason is asking. I did see the partnership with Caviar. Not sure what it entails. So prior to the administrative issue that they're having with the state of Massachusetts, we saw Caviar. We saw them as a very low risk participation opportunity for the DALP. And I was also asked to be advisor there, which I humbly accepted after speaking to Carol and stuff. He spoke to the team. He seems like a stand-up guy. And for that involvement, I was receiving a certain amount of tokens, which I would donate 100% to the DALP. So it was a riskless opportunity for the DALP, effectively, right? Because it's basically my time or whatever. I would help them do their bit. Unfortunately, there's been a holdup on their side, and so everything is on hold on that front. It's of no impact to us, but obviously that's kind of the extent I can talk about that now. We are, of course, waiting for a formal announcement from them before we can finally have that webinar, which has now been pushed forward by over a month. Okay, good question, Sebastio. Do you agree that 2017 was the year of promises and 2018 have to be the year of showing results? 105%, Sebastio. I so agree with that. And the longer time goes by and investors either need to see the tokens going up, if it's a utility token, or they need to see the dividends coming in. If you don't get that, you're going to get heavy sell-offs, right? ICOs, I'm not talking about cryptos in general, right? I mean, Bitcoin has no reason to sell off just because some ICO doesn't deliver on their targets. But it's interesting to note that I think that is a big thing. And there's exhaustion setting in. Investor exhaustion, patience, appetite that runs out over time, right? There's literally a decay function. If someone did a study, you could map that. How long after an ICO do investors start to see, okay, the management team is full of shit? It takes them 3 years to deliver a beta. It takes them 5 years to hit revenues. So I agree with you, right? The one thing I would state is, of course, if there are management teams that are genuinely toiling and they're making strides, but this is ultimately the business world, right? And blockchain doesn't circumvent certain things which are out of the management team's controls, then yes, there are obviously potential for delays. If a management team is working hard but delays, they're part of business, that's okay. But ultimately, I agree with you that 2018 is the year for ICOs to make good on their promises. 2018 and 2019, I would say. Dan Pierce is saying, do you believe that you will be a billionaire with the help of Spectre? No, Dan, I don't believe that. No, I don't think I would be a billionaire. I think we will substantially reduce financial fraud. That's a topic that's very close to our hearts, my heart as well. I don't think I'd be a billionaire. And then again, look, if you knew me, you'd see the way I dress. You've seen my interviews, right? I mean, I literally do not give a shit about financial things. I bought myself a new computer because it was 5 years old. It's a really nice computer. I don't have a Lamborghini. I don't have a Porsche. I have no fancy car. You could give me $1 billion, I still won't have one because I really don't value those things. If we ever made $1 billion in Spectre, I'd probably plow it back and try and create the world's best blockchain. one that has tax nodes in it, ones that makes regulators happy. I'd like to give back to the token holders that empowered us long term. So the question for me, a billionaire, the answer is no. I don't think so. Will we create a successful project? Yes, absolutely. That I believe. Thomas Gleason is saying, yes, I did see Vitalik say that, and I agree. Yeah, Vitalik has a great view on centralization. The crypto anarchists, they piss me off because they think 100% utter decentralization, like Telegram should be decentralized, right? I think that's total garbage. It's nonsense. It's bad for the sector. It makes them look like kooks, like crazy people. It shines a bad light on the sector. Because any technical commercial person looking at the sector is filled with freaks. Right? I mean, they have zero acknowledgement of commerciality. Applications need to be quick. They need to be secure. They need to be quick. Right. And so Vitalik has seen that. He said there's a problem in general with blockchains. There's a scalability issue, big issue. And they're working to solve that. I actually think they will. Over time. But he also says that there's a careful balance between what is considered decentralized enough to remove the middlemen, to be considered a consensus-based algorithmic outcome decision. Versus something that's too centralized. And the answer is somewhere in the middle. So totally concur on that. Actually, Les makes a great point. I never thought about that. Les has got something interesting in presentation. He said, I don't understand why your slide for China was actually on a map for North America. That's a really good point. I don't know where I got that from. Is it some sort of Chinese blog where they are envisioning taking over America? Is that what's happening? Is America getting taken over by China? Economically, where is that? Yeah, you're right. It is America, isn't it? Wow. Okay. Robert McLeod. Is the largest risk to Spectre simply a lack of user adoption, regulatory action, or something else? Very good question. So regulatory action. Let me break this down to you. Worst case scenario, we get regulated in Belize and we will run, right? Obviously, we will never accept U.S. citizens unless we get the tacit approval, legal approval of the CFTC, the SEC, and we want to start a discussion with them longer term, but that's not in our forecast, right? For restricted regions, that's not, we won't even have a discussion. We won't be accepting their users, but we're allowed to advertise online, and we can get light touch regulation in regions like Belize. Do I want that? No way. We don't want that at the moment. It's not required, but I don't think regulatory action is a big issue. There are brokerages around the world that are unregulated. Please take a look at ETX Binary. The parent company is FCA regulated, but ETX Binary is completely unregulated. Not even SISEC regulates them. But they're a great broker, right? Almost zero incidents of online fraud. So regulatory action is not a vector of concern for us in Spectre. Lack of user adoption is a vector of concern. This is why we've kept our user targets low. We've kept them at 3,000, etc. But then again, there's low and then there's ridiculously low, right? And if you look at the market, it's growing. It's a huge market worldwide. The fact that we're cryptocurrency integrated is very interesting because it opens us up. It allows us to bring smart options to the cryptocurrency community who don't know what it is, right? They literally do not know smart options, most of them. So I would say if I had to choose between user adoption and regulatory action, I'd say user adoption is a bigger vector of concern for us, but both are generally, I wouldn't say, major risk factors. If I had to rank, I would say for me, the bigger risk factor is security. And this is why right now, a lot of you must be wondering, why are we launching in March 31st? I had big fights internally with our tech team in December and January saying the same thing. I said, we have to get this out in January. And they're like, hey, please take a look at this. And it was literally, I think, 117 items, security items, three of which are related to HackerOne. There are so many checks on the back end, on the server side level, on the DNS level, on the DDoS protection level. There's so much that needs to happen, that is happening right now to secure the platform. Because if we really want to scale this up, right, you don't want this to be some esoteric niche platform with 300 users generating $10 of dividends per week. We want to be a Sears player in the market, known around the world as a brokerless, fraudless trading platform. We want to compete. This means we need to have tens of thousands of users without security incidents. Once a company gets associated with lack of security, or they're perceived as being underspending on security, not taking seriously enough, I think that can tarnish the brand permanently, and that's, for me, is a bigger concern. Okay, so a question from Thomas Gleason. Another question before the feedback. Yes, Thomas, go ahead. Yeah, I agree, Mike. Okay, David Butler is asking, are you able to give more comments on cassette and give more insight? No, David, the reason behind that is if I were to start speaking about cassette, it would literally be shilling then at this point. I think we gave enough information on the webinar last time. What we'd like to do now is build cassette, and we'd like to deliver it, and then I'd like to talk about it. Right now would just be me kind of, showing it off and all that. And because it doesn't exist at the moment, I wouldn't feel comfortable in really talking about it. Thank you, Thomas, for the kind feedback. I really appreciate it. And yes, we will definitely be on that Titanic. Okay, Sebastian is saying, considering the downtrend of the fossil fuel economy and the appearance of the crypto economy, what do you think will happen to the US economy in the future? Are we observing in real time the end of a country's golden age? This is a big, big question, Sebastian. China has surpassed the US in GDP, not in nominal terms, but in PPP. Some may call that fake news, but let's say even if it's not true, they're neck and neck. I think if the US can, this is going far too deep into politics, right? Because I'm going to bring up Trump. I'm going to talk about where their industrial strengths lie, where they need to beef up on the regulatory outlook on new technologies, how they should be. Ethereum should be an American project if America wants to retain the lead, but it is seen more as a Russian project to a certain degree, right? Obviously, it's based. The foundation is based in Swiss, but no one really classifies as a Swiss project. So I think it's a very, very long question. I'd love to talk about it at great length, but probably not on an open webinar. Let's just hope they take a more favorable outlook towards blockchain. That would be really nice to see. I would love to see the US and Japan taking a similar stance on blockchain. Bob Lung is wanting an update on DApp partnerships. About in a month, we can give you a more comprehensive update, Bob. Shirley's asking if you have a Canada ID but live in the US. Again, you're not a US citizen then. I think you should be fine. Email us, email legal@spectre.ai, so they can confirm that. Sure, Jeff. Thanks for the feedback. Thanks, Tom. Thanks, Paul. Thank you, Jason. Okay, Jason has quite a few questions. Jason is asking, has anybody asked about ensuring Spectre as a patent on your software? Good. Yes, we've filed a patent. We've filed a patent on the DALP infrastructure, the DALP framework, which includes Spectre. We will let you know if it's been granted or if it's been contested. And by God's grace, if someday we get the patent, that'll be awesome. And we'll certainly let you know. The process takes a bit of time, but you can rest assured we spent a good portion of December on this with our legal team here. Okay, a question follow-up from Jason. Is there rebranding for the future global appeal? Yes, we are going to be putting out the second concentrated poll with 5 names. We'll give the community the chance to decide. On that, I had promised in December that part of these decisions will be DAO or decentralized, so you guys will be able to take a vote on that. And a third question from Jason is, since there is less SXUT, will there be less needed to unlock features on Spectre when there's significant growth? Currently, I think you have total 2 to 3K. Yes, that's correct. Because of scarcity value in theory, if we add more users and in theory, if the value were to go up because of more usage, then because it's tied to a dollar value, these privileges, the absolute amount of tokens required per unlock drops mathematically. And you can see that negative or inverse correlation on the spreadsheet. Okay, I see a question from Ivan Bakshif. Do you expect the price of D token and U token to be the same? I can't comment on that, Ivan. That would be very difficult to say at this stage. Well, there are a lot of questions here. Okay, Thomas is asking, what will the Ethereum and the DALP itself be invested into, and the possible risk DN returns on that? Please elaborate on the mining caveats that I've posted in Telegram group. Okay, on the mining itself, I will be able to give a more comprehensive update in the middle of March on that. Okay. With regards to the Ethereum mandate or the DALP mandate, there is a document on the website. It starts with DALP. You can open it, and it gives more color on that, Thomas. It's a question from Sergio Tabun. Do you know any other good dividend-paying projects? Sergio, I personally don't, but you can ask in the Telegram channel. I'm sure a lot of our investors would know some. Okay, question from Gerald. What tokens do you hold, K? Obviously, I hold a lot of U and D. And let's see. You can PM me on that one. Feel free to PM me. I'm happy to share that. We hold. Okay, to give you a background, personally, I hold around 47 tokens, but I wouldn't be able to list them all here. Okay, Robert McLeod is saying, how aggressively can we expect you to ramp up Spectre's marketing effort? That's a good question, Robert. We will give the exact ramp up schedule in the March guidance, shortly before launch, per quarter. Okay, question from Sebastio, such as Ripple. I think I only got part of that question. Very good question from Mike. Mike is asking, does Spectre as a company have plans to diversify into other areas? The extent of diversification, Mike, is limited to our dApps, right? So the dApps that will connect to the DALP. Our mandate, Hitesh, Atol, myself, Ian, the managers, that's to build Spectre out, to scale it out big. We're not gamers, we're not into gambling. So we're not going to be personally building out the dApp store. We can't be expending energies there, but we are putting a team in place that will be tasked with building that out. There will be, of course, some overlap, management oversight and all of that. However, the extent of diversification is related to dApps, right? Fintech dApps, fintech/gaming dApps, which can benefit from liquidity provision. But it's not like we're going to pivot, if that makes any sense. No way. That's a classic bait and switch, and that our board simply won't sign off on that. Right. So your question from Gerald Van Dang. When is the D token going exchange? Is there a benefit of not getting D token on exchange? It'll be on the decentralized exchanges for now, Gerald. If anything changes, we will definitely update you. Good question. Robert McLeod is asking, can you speak at a high level about your marketing strategy? In fact, I'll save my breath. There is a webinar. It's the most recent webinar posted on our YouTube channel for Spectre. And there our Chief Marketing Officer and Business Development Director and Head of Investor Relations and Affiliates talk about this in depth. It's a 1-hour webinar, highly suggested viewing. We did it last week. Yeah, Sergio, Sergio's asking about other dividend projects and that are to invest and diversify investment. Um, there are many on our horizon. We're very careful with them. We're very careful, so we're extra slow in terms of running due diligence on them. Sergio, when they happen, we will of course announce them over the course of this year. Okay, Patty is asking one question for the end of the webinar. Can you give us an outlook about the coming events and milestones of Spectre? I think Patty had touched on that briefly already. And if there may be another webinar with the new hired team members, have they already started working? Yes, so the team members have already started last month, by the way. We don't shill, whatever progress we're making. I mean, look, if we sign one or two big introducing brokers, some ICOs would put out press releases. We're not going to do that. For us, the proof is in the pudding. It's number of users on the platform at the end of every quarter and the run rate they're in. So I think they will give webinars when it's required. Ultimately, like any listed company, they give quarterly updates at best, sometimes half-year updates, and that's kind of what we want to stick to that schedule. We will, as I said, as promised, we will give a management update every month, a very general update. But to get the business developers talking on, constant webinars, speaking about strategy, competitors, we want to keep them at bay. So, but any questions you have specific, you can always send them. We'll be happy to answer. Great question from Dan Pierce. Is it a goal to lessen Spectre's exposure to crypto systemic risk through DApp diversification? 100%. 100%. Both from a business risk standpoint, so we're talking about firm-wide revenues and translated tokenized dividends to SXDT holders, but also U price stability. The price of U, the token, is actually more volatile if it's only subject to platform usage on one DApp, which may be Spectre.ai. Once it starts to unlock privileges on various DApps, right? Then its own price becomes much more hedged, so to put it, or much more averaged out. So it's a diversification initiative, not only on the business firm-wide revenue level, but also on the token level, right? And finally, on the DALP level, in my interview with Cliff, I discussed a concept known as value at risk, which is important to monitor the book health of any company that takes on book risk. The DALP takes on book risk, as you know, although it's relatively limited. And so if all DALP exposure is coming from traders, that's very risky. So that's why we want to diversify dramatically over the years. Gerald Van Dang is saying, Cliff High said there will be some opposition to Spectre and would be surprised with early success. What do you think he meant? Yeah, so Cliff High's robot that he has created, the webbot, I think it's called, is linguistically picking up cues from various social media channels, and based on their concentration, frequency, and a range of other patterns, they enter his data sets, his model sets, and they spew out headlines, if I'm not wrong, or they spew out target prices or something like that. I'm not quite sure about that, but generally it's a linguistic bot. Spectre is such a generic name. There's a movie, Spectre, there's our project, there's the amazing, lovely, visionary folks at Spectre Coin. And there is, of course, the Intel hack, which happened recently, which was called Spectre as well, right? So his point about opposition was basically that there's just his bot would get quite confused. And in general, the public may also get confused because of the name. And it's a fair point. With regards to the early success, I don't know his recommendation process, and what he classifies as early success, etc. I don't know that so well, but I'm sure if you email him, you can ask him. I do know that we had a good call. It's on his channel. It was an AMA, I think 3 months ago. You can watch that interview, and then after that, he put out a report which had briefly mentioned us. And And yeah, I think the best thing would be to obviously would be to contact him because he understands much more what that means. Okay, I see a question from Mike O'Donnell. When you say 3,000 expected users for the platform, is that the UK market, European market, or retail forex? This is the global market excluding restricted territories, and it includes slices of the foreign exchange, the CFD market, the retail equities trading market, and of course um, the the formerly what used to be the binary options market and the crypto market. So we haven't bifurcated that by subsector. Yes, Sebastian, it's a very good point, and I didn't mention that. I should have. Sebastian is saying you mentioned cryptocurrency correlation, BTC, ETH, XRP, BCH go red. Everything goes red, stating it is related to a number of whales. Isn't it related to their trading pairs instead? Coin A is only exchanged on Ether Delta for Ethereum. If ETH falls to dollar, Coin immediately falls to dollar in the same percentage. Um, you're definitely right, but I wouldn't say it's the only factor. It's also the factor that there are a lot of big players holding this. But you're totally right. That's something I should have mentioned. Okay, a comment from Mike. I told my friend about Spectre SXDT. He went out and bought Spectre coin instead and read the white paper. He has a master's in computer science at Ericsson. Oh, well, okay, that's amazing. That's good. Look, I mean, the folks at Spectre coin, they work very hard. They have a very long legacy, if I'm not wrong. And if your friend read that white paper and purchased their token, that's good. I hope he gets a good reward. Apparently, they are visionaries, or so I hear. Okay, I see a question from Robert McLeod. Can you speak at a high level about your marketing strategy, Robert? I think this has already been answered. Sergio Tabun is asking, please comment on Cash with a Q and their attempt to put together bids from different exchanges. Qyon. Okay, this is something that our head of research is actually looking into. This week, he's actually on his way to Cyprus as we speak. It's a road trip all the way from Estonia because he's moving there permanently. I'll be able to speak more confidently with more data points and knowledge on this, possibly in the next webinar, Sergio. So hold that question, hold that thought. I'll answer it next time. David Winter is, let me just check how many people are still in the webinar. Okay. David Winter is asking, will we be expected to keep our SXDD tokens in our wallets or stake them? Oh no, you don't need to stake the tokens. Just to be clear, no staking. You just need to keep them in the wallets. Rive Frost, we are aware of the Request Network. You're asking if we would consider a partnership with them. We're obviously open to all partnerships. We haven't run due diligence on them. Do you think we should? Sergio Tabun is saying, please comment on. Okay, we already addressed that about cash with a Q. I agree, Mike. There is investment fatigue. Uh, it's a very good question. Rive Frost is asking, are the days of conventional trading like binary ultimately numbered? Will crypto supplant old-fashioned trading options? So here's the interesting thing. Right now, you're getting great moves, right? Volatility, 20, 30% a day. It's a trader's dream, crypto. Maturation over time will make these wild gyrations reduce. The standard deviation in returns and outcomes will reduce. It will compress, and so it'll become more like traditional currencies, right? If you look at traditional euro US dollar, it's one of the most boring things to trade. Here's the interesting thing: the lower the volatility, the higher the payouts binary option or smart option companies can pay. The higher the volatility, the lower the payouts. That's your classic um, um, Black-Scholes option pricing model in play, right? Or a variant of it. So I would say in short term, yeah, binary options don't look that attractive because you're getting 30% on a crypto binary option today. And people may say, well, I might as well not go binary. I might just go and buy Bitcoin on Kraken and hope it bounces up tomorrow 20%, which can happen, right? In today's markets. Over time, though, cryptos will mature. And so that's where smart options will really shine because there you get high payouts. 60, 70, 80, 90%. You can't make that in one day in cryptos. So I think it's a very interesting question, but you need to temporally define it. Okay, Patty's saying I sound like a robot. Plug out your micro and plug in again. Put up your voice. Guys, can you all hear me? Do I sound like a robot? Robot time? Thanks, Dan. Thank you very much for the kind feedback. Okay, Sergio Tabun is saying, please comment. Oh, sorry, I keep seeing this question again. On Quione and cryptos and cash with a Q, the Japanese exchange, we will get back to you on that. Thank you, Paul. Thank you, Paul, for your kind words. Okay, a lot of people are saying, I'm breaking up. Sound went bad. Kay, your voice is dying. Fix your mic, you asshole. Wow, I'm getting abused. Sorry, I'm seeing these late, right? Your Wi-Fi. Thank you for answering. Ah, it's gone. Okay. I think there was a cut. Sorry, I'm in Matrix bullet time right now. I'm seeing everything 20 minutes late. Okay, thank you, Sebastian. Very kind feedback. Thank you, Patty. Kayvan Devani is happy again. He wanted to kick me off the Four Amigos, saying that enough is enough. Your Wi-Fi is just not of world standard. Thank you, Kayvan. Good loyalty there. Stefan Kelber is saying, why does the Chinese chart show the US? I agree. I'm sorry about that. Yeah, Thomas, I would love to answer that. We have our internal price predictions for the tokens. Thomas is asking if we can give these. We simply can't. Just regulatorily, legal-wise, it would be a nightmare. So we won't be giving any price predictions for the token. Very sorry about that. Yeah, Maria Lisa is asking, why is the chart of China on the US map? That's because I'm a dumbass, Maria. That's why. Hope that answers it. Okay, Dan Pierce is asking, in the white paper you state the FX trading market equates to 81 trillion. Yeah, this is interesting. So Dan is asking how much of that can be attributable or brought over to the Spectre platform. The realistic answer is a very small amount. Because a big portion of that 81 trillion is your traditional CFDs, it's your traditional spot FX. We're not getting into spot, not for the next 1 or 2 years. Again, 81 trillion. If we even put a billion, like, look, this year our volume forecast is 75 to 80 million, right? And you see what yield that translates to for token holders. If we even reach 500 million someday, that is an enormous, enormous amount of volume for a platform like this, right? Because we didn't have $1 billion ICO, so our market cap isn't through the roof. So in answer to your question, we will certainly try. I mean, this is again me saying we will try to hit over 1 billion in volumes, possibly more. We are a risk-averse management team, right? I would feel much more comfortable once we have 1 year under our belt to say, okay, we've done this. Now in year 2, year 3, this is what we can do. All right. 81 trillion. No, I don't think we will ever come close to that. I'm just looking at the model. I'm being realistic. But billions is potentially possible, right? In the longer term. Let's first start with our forecast for this year and build it from there. In a fantasy scenario, yes, if we hit every single milestone and we hire the right talent, that's very important longer term as well. As we build out our business also on the institutional side, mind you, this is just a retail story now, right? And we also happen to hit all the milestones on the DApp Hub side with the dApps, and we become a serious player in that space. Then the volumes can reach very high levels. But trillions, I think, I'm having trouble seeing that. But please correct me if I'm wrong. Yes, AB is asking a good question. Any information on further applications that will utilize U tokens? So the famous U is we are soft commitment. I don't want to give anything out yet, but we're working with Track Invest to potentially allow the U to either exchange at a favorable rate to their token and unlock privileges, or potentially unlock certain privileges. That's not finalized, so please don't go out and say, hey, they did this, but we're working with that. And we've already found some partners in the ICO space where our U token could unlock privileges, but we want to, of course, sign things first before we we launch it. On our dApps, every single dApp will have U token privilege unlocks. That I can guarantee you. Okay, it looks like the sound is okay again. It's horrible Wi-Fi, it really is horrible. Robert is asking, do you have any forecasts as to what users will buy utility tokens? Yes, we do, Robert, but we are not going to be getting into that granularity in our forecasts. Thank you, David, for your feedback. Thank you very much. Sergio, question on the Forex trading and BO. I think I answered that already. If I'm not wrong, please confirm. Gosia is asking, do you see a possibility in the future some large company comes to you for a buyout? For the right price, would you sell? Hopefully they leave Spectre running and don't kill us token owners who were there from pre-sale days. Yeah, Gosia, good question. By the way, I've answered this already during the token sale, and we will just reiterate that response, is that in the event that we get this, we come to the situation, um, the first priority is to appease and satiate the token holders. So there will be a vote. And if there's a majority which says, yes, this is the right price, etc., then the change of control would happen, right? It's not a decision that we would take here and say, oh, well, we think this is the right price. Shut up, token holders. We made you 100% be happy. No, the token holders need to agree, overwhelming majority with the DAO vote, and then it goes through. And you would agree with me, that's the democratic way to do it. Um, we had some pushback. Some people said, oh, well, why are you doing a brokerless trading vision if you just want to sell out? Well, everything has a net present value. This is ultimately about generating return for our shareholders. And if it can be done quicker, because money today is worth more than money tomorrow, it's called time, net present value, the time value of money. If we are successful in our milestones and we attract the interest of a strategic buyer at the right price, why would we not want to bring forward years of growth? So again, we aren't crypto anarchists here, right? There's a lot of teams that are crypto anarchists, and invest in them by all means. But with us, we are tied to financial reality, and of course, we will. Again, I reiterate, we'll put that vote to you guys first. Okay. Dylan, no, not really, not really. There was nothing new certainly mentioned. Okay, I see a question from Rye Frost. Yes, I think you should do your due diligence on Request Network. Okay, that's noted, Rye. AB is asking an interesting question. Do you see more incumbents in the option and trading space moving to crypto-denominated variants? Yes. But equally, I also see a good take-up from crypto enthusiasts, crypto traders moving into traditional smart contract-based variants of traditional asset classes, right? Like CFDs, so smart CFDs. We're already seeing that, by the way. A lot of brokers offer CFDs. The only difference is they're centralized CFDs. They have nothing to do with smart contracts. You deposit in fiat, trade in fiat. That's not what you do on Spectre. And of course, then smart options, which is an entirely new contract, which I think is alien to pretty much probably over 15 million crypto traders in the world at this moment. Ivan, this is going to be recorded. It has been recorded, and we will upload it to our channel. Thank you, David. I'm glad you enjoyed it. Sergio, you're asking, where do you see SXDT in the summer On CMC being coin market cap, top 30. I don't know, Sergio. All I know is that we are here to deliver our roadmap, try to meet our numbers, hopefully surpass, but certainly meet. That's what we want to do. Um, and that's all I can say at this stage. I can't make predictions on price of the tokens or the market cap or or um, or any of that at the moment. Last call for questions. Question from Robert McLeod. Do you have forecasts as to what percent of users will buy utility tokens? We do, but they're internal, so that's not something we be opening. Your follow-up, are the incentives such that users not using U tokens will suffer a major loss in value? Oh, I see. No. However, if you're a trader and you don't own U tokens, you're missing out. And traders would need every edge they can get to beat the DALP, to beat the markets with the assistance of the DALP. So if you look at the U token privileges, which is under documents on the website, you will see they're pretty interesting privileges. It's not like change the color of the background or or change your user profile to a sexier avatar. It's not those type of privileges. These are some serious privileges. So a question from Thomas Gleason. Yeah, sure. It was my pleasure. Thank you, Thomas. Thank you. Yes. See you on Telegram. Thank you. Okay, Dan Pierce is saying when realistic forecasts. Yeah, it's a good point. So here's the thing. We'd like to see after the first 2 quarters how we're tracking, right? Um, Obviously, the first quarter is a slow ramp up. It's the first 3 months of such a big project. We expect the ramp up to be more QT, more back end loaded, right, for the year. But after two quarters, maybe 3 quarters, we will be able to see what we've done so far, what our year-end forecast is, and then backward deduce what that means for the final 2 quarters, right? And there we can look to see if any adjustment is required. This is, by the way, what all professional management teams in the listed equity space do, right? Upgrading guidance right now would be probably foolish at this stage. Thank you, Dylan. I love you too. Thank you, Sergio. Thank you. That's very kind. Yeah, that's an interesting point. Yeah, I'm not going anywhere. Uh, we really, really are excited. I know we don't show it that much. We don't shill our token. We spend most of the time just writing the letter U in the Telegram. But there's a tremendous amount of excitement in the firm. Um, I just sounded like Trump there for a second, but there is really a huge, tremendous amount of development going on in the background as well, and the market opportunity is very, very significant. And as Hitesh had pointed out, he's our chief marketing officer. One of the biggest things that drew him to this, of course, is to build out Spectre's trader base, but more than that is the opportunity that DALP opens up, the beauty of the DALP framework, right? If correctly applied, if correctly incentivized for affiliates, um, is immense. And so that's a long-term thing. That's a 3 to 5 year your project. So you can rest assured, unless something happens to my health, I'm definitely going to be with the project. Yeah, Ivan is asking, how are your investors divided between D and U tokens? So the split is 77 D and 23 U. Yeah, I know that. I know what you mean. It's actually quite comical now that I look at this Chinese red thing on the American flag. Can't believe I missed that. Okay, Haroon is asking, did you mention anything about renting opportunities for U tokens? We ran the idea internally. There was a good idea by one of our Australian contributors, I believe, investors. It was a good idea. I think lending and renting right now is something just brand wise, we don't want to be associated with just for the short term, especially given what's happened in BitConnect. And also, I would like to state that resources wise, we just would not have the time to create the infrastructure to allow renting of U tokens at the moment. It's never been a roadmap item. Yes, it's interesting. Are there more interesting things out there? Yes, at this moment there are, but it's certainly something we can revisit in the future. Thank you, Ivan. Thank you, Dario. AB, you're asking what are you going to do to maintain your health? Basically, eating pizza. Okay, Harun is asking. Okay, no. See a question from Atik here. Why is the U token price tanking? Um, well, the market has been hit. It's still above the ICO price. I think we would see more demand for it once the platform launches. Atik. Sure, Johnny. Thank you, Patty. You. Thank you, Mike. Thank you, Wayne. And thank you, everybody. So, look, I'm going to thank you, Maria. I think I'm going to close this now. I'm sure there are more questions, but I hope that the data points delivered during this webinar, the analysis, of course, a discussion with you, which I found very useful, and the points that I missed, thank you for bringing them up. I think the sort of the cumulative impact of this, hopefully, whoever views this webinar, it should, to a certain degree, allay their concerns. The crypto space has taken a hit, but please be reminded that we are where we were in October, right? It's not like it's wiped out years of gains. And let's keep it real. Thank you, David. Thank you, Rai. Thank you, everybody. Talk to you all soon.